Have you ever seen someone raise $20 million for a mediocre deal while another operator with a better project can't raise a dime? It happens every day. And here's the truth. It's not the structure of the deal that makes the difference. It's how you structure yourself in the conversation. Now, for context, I've been in rooms where operators have raised $50 million in 30 minutes. And I've also seen others with stronger numbers get laughed out of a room. If you haven't met me before, my name is Marcin Drozd. I've raised multiple 9 figures in private capital. And in this video, I'm going to show you the exact framework that separates operators who beg for money from operators who get begged to take it. So let's kick it off. Point number 1 is why the old structure is dead. Listen, the whole build it and they will come mentality is dead as a doornail. That might have worked when deals were rare, but now everyone's pitching something. And competing on IRR just makes you another number in someone's inbox. For context, I had a client raising $10 million for a land development project. He was subdividing and selling off lots to builders. Simple business. On paper, it was an incredible deal. 30% plus IRR, pre-sold lots, and clear upside. But he couldn't raise the capital. Why? Well, because he didn't actually position himself. He was focused on the numbers and not the narrative. He never told the story of who he was, why his team could deliver, or how he'd taken so much risk off the table already. And to anyone outside of land development, it sounded complicated and risky. When we started working with him, we flipped the script. He started teaching investors about the market, walking them through how to de-risk the development process, and highlighting the pre-sold lots, which basically showed people how they were going to get their money back plus get a return. Fast forward, once he structured himself properly, the capital came in fast. Literally, same deal, new story, total transformation. That's what I mean by structuring the conversation, not just a deal. Because investors, they buy your certainty, and the certainty starts with you. Now, this isn't an excuse to do crappy deals. No, you got to do a great deal with the numbers and all the economics have to make sense. But ultimately, if you can't tell the story, you're never going to get an audience in the first place. Point number 2, the new reality. Investors today more than ever buy the jockey, not the horse. So what does that mean? Sophisticated investors buy the operator, not the deal. Because people with real money are thinking beyond this initial project. They're thinking about who they can trust with the next 5. Because somebody who has a lot of capital is going to have a lot of opportunities to put it to work. So when you position yourself correctly, you become the asset, not just the business. A few years ago, I remember being on a 30-minute call for a business I was working on. By the time we hung up, I had the terms back for a $100 million commitment. No deck, no begging, just clarity. That's the easy method at work. Now, what is the easy method? E stands for exclusivity. So you have something unique that you can clearly communicate to somebody else. A is for abundance. So you can clearly demonstrate that you have demand and options. Nobody wants to back you. So when you have lots of people that you can point to as being interested in your business, that creates abundance of choice. S is for scarcity. So you can be able to demonstrate the limited space or limited amount of time that the opportunity is available. And Y is for your allocation. So the investor decides what makes sense for them. Now, when you frame yourself that way, investors start feeling like they're being invited, not pitched. And that's when you stop chasing money and start attracting. Point number 3, how high net worth investors really evaluate you. If you didn't grow up around a lot of rich people, this is really going to resonate. See, high net worth investors aren't asking for your IRR spreadsheets. They're thinking, can this person execute when things go wrong? And trust me, they've made enough money to understand that everything isn't going to be perfect. So they're also thinking, can this person protect my downside? Now, to give you an example of that mindset and mentality was never clearer than in 2008. And back then, I was raising capital for Ken McElroy and MC Companies. One of the deals we did was a building called The Place at Sun City Apartments. And it was right in the middle of the financial crisis. Literally, people were still losing their homes, market was collapsing, and everybody thought real estate was toxic. And when I was on the phone with my clients, they kept asking me, why would I invest in real estate right now? And my response was simple. That's exactly why you should, because everybody's wondering the same thing. And look, don't misunderstand, it was a tough time for most people, but a lot of people, the vast majority of people still had jobs and they needed a place to live. Now, a lot of those people were moving back into rentals because they could no longer afford their mortgage payments that went from $2,000 to $4,000 or $5,000 a month. So they still had jobs. There was still demand in the marketplace. They just needed a rental property to live in, to house their family and hopefully keep their kids in the same schools. So what did we do? We leaned into that logic. Now, that sense of clarity flipped the conversation with investors. Now, here's the easy method and how it showed up in that deal. E for exclusive. Well, we had a rare counter-cyclical opportunity when everybody else was frozen and sitting on their hands. A was for abundance because we had a large base of investors who had just been crushed in the stock market and were looking for something real, something tangible, something they could actually touch and feel and see. S is for scarcity. Well, we only needed, I think at the time for that deal, about $8 million. And once it was full, it was gone. And then Y for your allocation. So if it didn't make sense for an investor, not a problem. There were others that were waiting. See, this positioning turned fear into demand. Now, obviously, guys, if you're going to be raising capital, make sure you have the right paperwork, right legal, the right teams. But ultimately, you also have the right story to be able to put all this together. And you know what's interesting is those same investors that I just told you about went from hesitant to eager, and many of whom actually ended up buying into future deals as well. See, that's the power of structuring your presence before you pitch. So here's the hard truth. You can have the best deal in the world, but if you can't structure the conversation that gets investors to say yes, you'll watch someone else with worse deals walk away with the money. See, that's the reality that keeps operators stuck at the same level for years. Inside M1 Inner Circle, we don't just teach you how to deal structure. We rebuild how you show up to investor conversations so you never have to chase money again. Point number 4, the practical shift you need to make money today. Look, if you want to raise capital consistently, you need to stop competing on returns and start competing on clarity and positioning. See, when an investor understands your logic and trusts your execution, the money literally follows. You need to build your authority before you need that check. I call it being capital ready, not capital hungry. Take our Houston deal. We bought a $16 million property for $11.1 million. Not because we bid higher, but because we could close. We had investors lined up before the ink was even dry on the deal. And that's the easy method again in motion. Exclusivity, abundance, scarcity, all driving real investor demand. And when you structure yourself that way, deals don't just come together, they come looking for you. So here's what I've learned after raising multiple 9 figures in private capital. The operators who scale aren't the best deal finders. They're the ones who've mastered the ability to position themselves to not only have deals come to them, but have capital come to them as well. So hopefully this video has been useful for you. If you know anybody in your network that's a capital raiser, fund manager, or serious operator, make sure you share this channel with them. Again, my name is Marcin Droz, and I appreciate you watching this video. Hopefully you've got value from it. If you did, make sure you stick around for the next one, and we'll dig into it even more.